Hey guys, welcome to another Damilola Forex Academy teaching. In today's teaching, we are going to be using our pure price action methodology to look for what a trade entry opportunity on the Forex market using gold for our teaching today. For those of you familiar with my teaching over the years, you all know that what we have a system, and something about our system that every single person should know right now is how consistent our system is. Okay, if you want to judge a trader or if you want to judge a mentor by their system, it is how consistent it is. What does that mean? This means that what I show up today, I use the same system. I show up in the next 5 months is the exact same system. I show up in the next 10 months is the exact same system. If you see mentors switching around systems, today they are trend line trading, tomorrow they are Fibonacci trading, the other day they are talking about indicators, and they just do different things. That means that what that particular mentor is not grounded and does not really have a working system. For us, over the years, we've been doing the exact same thing, and you can scroll down to all my YouTube teachings to see that this is what we do. Okay, so as usual, what is the first thing we do when we come onto the charts? It is to identify the real-time point where price is at, and this is done on the monthly time frame. Like you can see what all of this entire information, right? This is the real-time point where price is at, as we can see clearly. Then now that that has been defined, what is the next thing we do? We read the structures that took prices to that point. Okay, why do we identify the real-time point where price is at? This is so we can be able to know that, okay, this is our most significant area of interest. Okay, obviously with the real-time point where price is at is the most significant area of interest on the monthly time frame. The other things that I want to do beyond that on the monthly time frame is to understand that, okay, what are the structures, okay, what are the characters that took prices to what? To this most significant entity where price is at. Okay, so now what are the characters? We'll read it from here. The remaining one are just basically flat structures. All of the structures behind it are just flat structures, you know. But price started making clear structures from here. Here we saw price make push exhaustion, small structure, big structure, then price formed a big structure right here. So this is what the last higher low of this particular structure circle. I've taught structure circles, I've taught fractals so much, and I have a full course on them. Link is in the description below for you to buy my course on structure circles, on fractals, and I'll be glad to mentor you into success in them. Okay, then after this, what did prices do? Prices started smaller structure circles where it made push exhaustion, went ahead and made a big one right here, push exhaustion here, then started small structure circle where it made what? Push exhaustion, started the tiniest structure circle here, push exhaustion, price came here, made push exhaustion, and prices pushed to this point, which is the real-time point where price is at. Okay, so now that we've understood that, yes, the structures that took prices to the real-time points where prices at are clear bullish structures of what? Of higher highs and higher lows, just like we've read. We saw prices what? On different structure circles, right? But they are all aligned into one character, higher highs and higher lows, indicating a clear bullish structure on the gold pair. Okay, so what are we now going to do? We are now going to what? To take this zone, right, and identify the most significant high. This is the most significant high, or the highest point of the chart, and we are now going to take what? The last higher low of prices. This right here is the last higher low of prices. We could decide to zoom in, you know, so that you see the bit more clearer. You can see that what this is what the last higher low point of prices. This is the highest point of prices, and this window will now be our range of focus. Okay, all of the bulk of information that we've read from, you know, from the monthly time frame, reading prices as far back as year 2000 and all, what we need is what? Is to keep bracketing prices into range of focus until we see a real-time trade entry opportunity. This window right now is our current range of focus, where we will now tag the highest point here as monthly resistance, and we'll now tag the low point here as the monthly higher low point. Obviously, this is the monthly time frame, so we have to give these levels their tags. Okay, so it's the monthly higher low point, and this is the monthly resistance point, and this will now be our range of focus. So as you know, we'll keep bracketing prices into range of focus until we see what? A real-time trade entry opportunity. Okay, so this is our very beautiful range of focus, and we're going to be doing that on all time frames. Our system is so beautiful and it's so profitable. Okay, and it's very easy to replicate for profits. Okay, so now that that has been defined, what are we now going to do? We'll now take it to the weekly time frame. What is going on within this zone on the weekly time frame? On the weekly time frame, from here we saw prices make push We saw price come for a big wave of exhaustion. Then we saw price make small movements here, push exhaustion. Then it made a smaller one right here, push exhaustion. Eventually went and made a big one right here of push, exhaustion, and push. Okay, so this is what? This is the last higher low. Okay, now someone might ask, why did we not tag this level here as an higher low since price is pushing up? Higher lows are only confirmed by the presence of an higher high. Okay, that is, if price makes movements like this, okay, push, exhaustion, right? So far price has not broken above. This is not yet an higher low. It is only an higher low when prices breaks above. Okay, so it's important to note that that higher lows are only confirmed by the presence of an higher high. So let's go ahead and read the entire structures again while we enlarge the candlesticks just a little bit more. Okay, so from here, which is our current range of focus, right? We saw push, exhaustion, then we saw push, exhaustion, and we saw price make a small structure here, push, exhaustion, eventually went to make a bigger one right here, which is what? Push, exhaustion. This is where this week is where the entire movement ended, right? Then this is push, exhaustion, and this is push. So this is not yet an higher low because price has not made an higher high. So that means that what? That this level right here, I'll make it pinpoint. This level right here is what? Is the last higher low of prices on the weekly time frame. Okay, so let's take all of this move out. So this, the end of this week here, is where the weekly time frame higher low ended. So we'll now tag here as weekly HL. Remember, our job is to keep bracketing price into range of focus. Initially, we started from the monthly higher low. Now we've streamlined it into the weekly higher low. Okay, by what? By identifying the last higher low of prices, the last higher low. Originally, it was what? It was the monthly higher low that was the last. Now we've seen the weekly higher low. So we can see how we've streamlined the information. So right now, what is our new range of focus? This window from here to here. Let's make it pinpoint. All of this data right here is our new range of focus. All of the bulk of information that I've been reading from the monthly time frame have brought us to this point right here, which is what? Which is our range of focus point. Okay, so now we'll now go ahead, take this our very organized range of focus to the daily time frame in order for us to see a real-time trade entry opportunity. So now within this range of focus, right, we identify this point as the low point right here. So all of this information actually what we have to deal with. Okay, from the low point right here that we identified. Remember, we tag this level as the weekly higher low. Okay, so this is the low point of it, then this is the high point of the monthly resistance, and this window here is our range of focus. Okay, so what is going on from the low points that we tagged right here? From here, we saw prices make push, we saw price come for an exhaustion, push, we saw price come for an exhaustion, push to this level right here. These levels, there are multiple resistances at this level. You can see resistance. So this resistance rejected prices and there was a change of character. The last higher low got taken out. Okay, so now that there's been a change of character because the last higher low got taken out, we know that on gold, because we are coming from the monthly time frame, right? That's why it's important to use the monthly time frame. Remember that the monthly time frame gives us that bird's eye view. So from the monthly time frame, we have been able to see that gold is what? Is bullish. This means that what? If you ever find yourself buying gold, this means you are buying in the direction of trend. You are buying with the flow of the ocean. While if you find yourself selling gold, it means you are selling a retracement. Now, what are the rules to selling a retracement and the rules to buying in the direction of trend? Okay, if you are selling a retracement, your take profit is at 61.8. Okay, because 61.8 ends a retracement. The Fibonacci is a very important tool. I have a full course on the Fibonacci. Link is in the description below for you to join the course, and I'll happily share with you that information on the full course on the Fibonacci. So what does the Fibonacci do? The Fibonacci allows us to what? To know where a retracement might be ending. Okay, it gives us that retracement number. So now what we have seen that what? Yes, there's been a change of character. Just like we said, the last higher low got taken off right here. This is the last higher low point right here that got taken off. Okay, so now that the last higher low got taken off, what are we now going to do? We will now bring out our Fibonacci from the low point right here and take it to the high point right here, and we can see that price is truly sat on the 61.8, and this ended that retracement. This is the power of the Fibonacci. Okay, and Fibonacci is one very important tool that has made us successful, right? So this is push, exhaustion, push, exhaustion, push, change of character. The last higher low got taken off and price ended at the 61.8. If you don't know how to use the Fibonacci, just run to the link in my description for you to master this tool that has made us profitable over the years. Okay, so now that's what that price hit 61.8, we will now go ahead and tag what? And tag the 61.8 level right here. So let's just put the notes here and tag it as what? As 61.8, 61.8 potential reversal area. Okay, that's what we are going to do there. We'll now take the fib off since we've already used the tag as 61.8, and now take this one's off. Okay, so what is the next thing I'm going to do? We've seen that what there was a bullish move in the direction of trend. All of this bullish move was in the direction of trend, and there was a change of character that ended at 61.8. Now, what is my next duty? My next duty is to read the entire bearish structures that brought prices down to 61.8. And at a change of character, I'll just wait for a discount. Okay, we have multiple entry variations, right? There's one that's called a discount, which I've taught also in some of my free YouTube teachings, and I have a full course on those. Okay, so when there's a change of character, the last lower I gets taken out, prices pulls back to 61.8 before heading in the direction of trend. So either or, we've been able to identify what the 61.8 level, and what is our job? This is direction of trend, this is retracement. Now, at a change of character here, what am I going to do? I'm going to keep buying in what? I'm going to keep buying in the direction of trend. Okay, I could wait for a discount to strike in just to get a better risk to reward. So we'll now take that movement to the 4 hours time frame. Okay, so now, like we said, this is our new range of focus, the 61.8 PRA, which is from daily time frame to the monthly 61.8. So what are we focusing on? Just like we saw, we are focusing on what? On all of these bearish structures that brought prices down to the 61.8. Remember that all of the moves from here all of these moves were very beautiful bullish moves, right? All of these push, exhaustion, big structures, push, exhaustion, all of these push, exhaustion, then price made the move, the push, and there was a change of character, which prices ended the change of character at 61.8. Okay, remember that if we're buying this in direction of trend. So what are we now going to do now? We know that okay, this 61 points is a PRA, which is a potential reversal area. So if we see a change of character at this PRA, what do? You buy in the direction of trend to the highest point of the broken structure circle. So this is push, exhaustion, push, exhaustion, push to the 61.8, change of character. The last lower high got taken off here. What do you wait for? Just wait for a discount to 61.8 and buy to the highest point of the broken structure circle. So this is the structure circle that got broken right here, and this is take profits. Okay, so we will just tag this level here as CSC, which is what? The current structure circle. Sorry about that. We'll tag this as what? The CSC, which is the current structure circle, and this is our take profit level. Okay, so what did we do again? We read all of the retracement structures and we saw a change of character. The last lower high got taken off right here. Okay, originally the characters were clear bearish characters. Okay, this is push, exhaustion. These are clear bearish coordinations, push, exhaustion, all in lower highs and lower lows. You can see this is a lower high, lower low, lower high. This is the last lower high, lower low again. The last lower high got taken off. Then we waited for a discount to 61.8. We have multiple entry variations, which is what? After there's a change of character, right, you can buy immediately. However, for we are smarter traders, right, for that sniper entry, we wait for a discount to the 61.8, and then at the 61.8, we strike in to the top. Okay, so now we are now going to bring the fib out to see the 61.8 from the low point right here to the high point. So you bring out your Fibonacci from the low points, okay, to the highest point of rejection. You can see prices came to the 61.8. So what am I supposed to do? I'm supposed to buy pinpoint at the 61.8 right here. Hide my stop loss anywhere around here, just around this last, below this last low. If you switch, you can see that this is where the last low ended. All of these are just weak rejection. So anywhere around here should be where my stop loss would be. Then the highest point of the broken structure circle, this is what? 1:3.8 risk to reward. Okay, so it's a very, very beautiful trade by just waiting for what? There's a change of character. Okay, you can see that this one's, change character, then came for a discount, and right now this is our take profit. However, we can see that prices almost got to take profit, but then it lost momentum and came back down. And right now, price is now ready to, it's a situation like this, right? Okay, just a moment. Let me show you what prices did. It's a situation like this. Remember that all of these are the retracement structures, right? What the prices do? Change character, give a discount. My take profit is supposed to be at the highest point of the broken structure circle, because this is the broken structure circle and this take profit. But you can see prices came around here, which is something around 90%. It's important to know, right, that as traders, we have an 80% take profit rule, because you can do the most perfect analysis. And imagine being on 80%, right? Remember, this trade is about 1 ratio 3.8 risk to reward. So 80% should be about maybe 1 ratio 3 risk to reward, or maybe 2.9 or something like that. So imagine prices at the max, it was in about 1 ratio 3.5 risk to reward. Okay, so imagine prices get to as much as 1 ratio 3.5 risk to reward, only to reverse and erase all your profits. Yes, it won't hit your stop loss because our stop loss is defined at the last low, and prices must come to this point. It must come here, so it will never hit your stop loss. However, imagine all of those profits being erased, and right now the journey just started again for you back to this point. So that's why we have an 80% take profit rule. At 80%, you can see that at 100%, our take profits at the highest point here, 3.8. At 80%, maybe something around 1 ratio 3, we've walked away with prices and we've made that money. 1 ratio 3 risk to the reward. If we put 10,000 US dollars on the line, that would be $30,000. If we put $100 on the line for those with small accounts, that would be what, 300 US dollars. Okay, so right now, what is our new opportunity for the week? Remember that what prices must actually complete to this level. It must get to this CSC points. Okay, because of the direction of trend is bullish. Okay, and there's been a change of character. So right now, what did we see again? We saw prices came down again for all of these retracement levels again. It never took the last low right here. So all of these are just retracements. Where was the last lower high got taken out again? There's a change of character again, and this is where price is coming to right here. Okay, so it's a situation, right? This time around, prices has not given us the entry variation too. That is the discount entry. The last lower I got taken off. Not right now that the last lower I got taken off. The only way you would have gotten into this trade is to what? Is to buy pinpoints at the change of character point, put stop loss at the low here, and buy to this level here for about 1 ratio 1.5 risk to reward. Just like I was talking about, right? If you don't want to buy to 100%, anything around 80%, somewhere around here, for about 1 ratio 1.3, you would have taken profit. So imagine taking profit at 1 ratio 3.3 risk to reward. $10,000 has become $30,000. You now invested another $10,000 here, and now on TP this $13,000. So on these two moves on gold, you've made $43,000 easy. So this is how trading is. So just look at it on a percentage point of view, and you are going to be able to understand trading better. Okay, for those that want to learn more, you want me to hold you by the hand through the understanding and mastery of price action trading, link is in the description below to join my 2 months mentorship program, and I'll be there to help you get profitable. See you guys in the next teaching.